Good morning. It's January the 18th, 2017. Time to kick off another trading day. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, Friday is the inauguration. The attacks in the mainstream media and from the left and on the street are increasing. Trump's going to be in a full-blown war against the establishment, the existing bureaucracies in Washington, D.C., the mainstream press is just an arm of the left right now, and we're going to get volatility, and that's what we've been missing in some of our markets, and that makes it easier for us to prosper. Okay, the bond is pointed lower, as is the note. We've got a B, and a B, and another B. I started off this morning wanting to buy 25s to 29s. It's my belief that we're going to have a trading range market because of the inauguration on Friday. So we're going to put our buy one down here at 25 to 29. Looks like we're going to get it. The attractor right here is at 26. And resting limit order buy at 26.5. Should give us a little bounce, maybe back to 29 minimally. Next buy is 17 to 21. On the sell side, I was hoping to sell threes to 7, and 11 to 15. I haven't abandoned that idea yet, but it may take a 31 to get into the market. News today: CPI up 0.3, core up 0.2. That's the number one focus right there. Number two focus will be IP up 0.6. That's a very strong number. Manufacturing IP up 0.3. Capacity utilization 75.4. No one will pay any attention to it. Housing market index at 69. That could play in the overall general well-being of the market. And then the beige book. And people will be looking at how strong are the regional economies. So the news focus is going to be core CPI, followed by industrial production, and perhaps housing market index, and then the beige book this afternoon. They'll pick it back up. Okay, I'm trying a different color this morning just to see what type of contrast. We have been using a purple. Let me know if you like this blue better. On to the 30-year. Hope everybody is having fun. We're going to have a good year. There's a lot of things that can just start to fall into place, but the biggest thing we need is some volatility. And my guess is that the Fed and the administration won't be supporting the market like they have been. And if we can get a two-sided market in the E-mini, it'll should start to help things. Okay, here's our attractor right here, most recent in the market's memory at 52.13. I think we're going to hit that. So on the resistance side, the spill was from 20, so 20 to 24, number one. Selling 27s to 31, sell 1. 3 to 7, sell 2. On the support side down here, we're going to make 8 to 12, number one, so we're going to buy 1 to 5. And then 21 to 25 for buy 2. Yesterday's market where the dollar got clobbered has reversed. The dollar is up today. And gold and treasuries are down. And what that does for us as traders is that we can sit here, what has really changed? And we talked about this yesterday. Nothing had changed. Trump had an interview in the Wall Street Journal, and that was used as the excuse to blast the market, but none of those policies had been implemented or put in there. So nothing had really changed. The world is awaiting to see what Trump is actually going to do. And you have to keep that in mind. So what that does for us as traders is that we don't get too excited about big moves either way. We're really anticipating a little higher, a little lower, but nothing will change big time until the news changes, and that's going to require Trump being in office and actually doing something. Okay, we have a B in gold. It is pointed lower. This 1205 area is where the next high volume number is. So this 2 to 5 area should be pretty good support for us. We have these single prints here at 8 to 10. So the first buy, and that's where support is 9 to 11. Then we'll make it 5 to 7 for buy 2. On the sell side, 14 to 16, sell 1. 18 to 20, sell 2. It's funny, writing with a mouse, it almost works. And sometimes it takes a great deal of motion to get anything on the screen, and sometimes you blink your eyes and there's a line across the screen. So it's a skill I have not fully mastered yet. But I'm working on it. Okay, the dollar was strong yesterday. We peaked in the V period. Then we had a double top at 107.40. Yesterday's sell was 107.40 to 50, our number 2 sell. Coming in last night, we were trying to sell 40 to 50s, and we've got a high of 36.5. We like the sell side. Here's the move that started out of London, and then we have this X period high. And so we're at 91, so selling 107s, sell 1, and 7 1/4, sell 2. Buy side 675. I really don't like the long side in this market, as you well know, but sometimes we do trade from the long side. Very, very clean break in the market here at 107. So leaning against 107 for our first sell looks reasonable to me. I know you don't want to hear that. You say it looks like a winning trade to me. Okay. Leaning against 107 looks like a winning trade to me. It'd be interesting to see what happens in crude today. The EIA report is tomorrow. The APIs are tonight. Crude's in the trading range. Probably with a downward bias. I mean, every day we come in the market and read about how American shale oil production is hurting the market, and OPEC hasn't taken that into account. So we have a move out of middle that started in P period. We have had a seller at 53.50. We like that. We had a last night's market, and we're in the March contract right now. We're not in the Feb. You should roll 2 days before expiration, so March will be front, the opening bell today, and that's is usually about 60-70 cents between the two contracts. That fits. We have had support at 52.50 yesterday. You can see that right here. So right now we're going to play for 52, 52 1/4. And then 51.50, 51.75 by 2. On the sell side, 52.75, 53, sell 1. 53 and a quarter, 53.50, sell 2. Okay, what to expect in the E-mini today? I think we're just going to have another range-bound day. I don't see anything that can break us out one way or the other. We do have some news today that can move the markets, especially industrial production. But when you come back and you put this all together, we're looking for a new move out of the 2265 area. So it's been very, very quiet. It's been a difficult trade. I've got to buy at 60.62. 55, 57, you all have heard all of this before. Stops above 68, so 69, 71, sell 1. 74, 76, sell 2. CPI plus 3/10. Core plus 2/10. IP, industrial production, plus 6/10. Manufacturing plus 3/10. Capacity utilization 75.4. Capacity utilization does not play until there's inflation, and when it gets over 82, 83, everybody figures that you got to pay people to come work for you, pay them more, and then that could become a factor. Housing market index 69 in the beige book, and after the market closes today, API inventories. So the focus is core, CPI, industrial production, maybe housing market index. They will take a strong look at the beige book. Okay, it's going to take a bit to get stuff up, finished, done, posted. I'm going to get busy on that. I will be back with you as soon as possible.